Hello and welcome to the Weekend Investing Daily Bite of 21st of January and the market complete bloodshed today, extremely volatile, many upswings and downswings of several hundred points from the morning to till the afternoon, completely smashed intraday traders and of course long-term investors. The pain has worsened. Many stocks down 8 to 10% despite great results. So, a lot of times stocks discount much ahead of the news, and then when the news comes, it becomes a sell on news kind of an event. So, no good story to relay today. It is certainly for long investors a disappointing day for the markets. Big fall in the markets. Reason could be Trump, or maybe we were just waiting to fall and waiting for Trump's announcement. Please read the disclaimer fully and do subscribe to the channel if you haven't. Also, to let you know, we are also running a Hindi channel alongside, and you could go look at that as well. Where is the market headed? So, markets has given a very clear bearish engulfing candle today. Uh, this kind of a candle which engulfs, six previous sessions is indicative that there is more pain to come. Uh, there is no certainty, but this is, you can say, 75% probability maybe that we will get more pain, and there is only some chance that we will not go down any further and just return back from here. That is usually not the case when you have big bearish engulfing candles. But the fact remains that we have been falling now for more than 3 months, and at some point of time, some natural counter reactions will happen, and that could probably happen sometime maybe between now and 1st of February when the budget comes, or post the budget. That maybe the outcome may not be anything positive, but because the market is positioning itself for a worst outcome, there may be a relief of some sorts. Today morning, it felt like post Trump's inauguration that there is no immediate tariffs. But then on the side, while talking to the reporters, he mentioned something about we will put 100% tariff on BRICS nations. So there is no specific tariff yet, but the market has given up basis fears that something will come. There is a lot of talk about H-1B visas not going forward towards uh, permanent residencies. A lot of H-1B holders not getting a citizenship for their birth of their children. So there will be a turmoil of some sort for some time till things cool down and stability comes back. Nifty Next 50 also down 2.6%. So Nifty dropped 1.37%. Nifty Next 50, which is the higher beta version of Nifty, you can say, collapsed 2.6%. So all the gains made in the last four sessions have been demolished. The mid cap space also down dramatically at nearly 2% for the day, and small caps also down nearly 2.12% for the day. So nothing spared, no sector, no segment has been spared. Bank Nifty, despite yesterday's great run, down 1.58% here. So FIIs continue to sell in a big way. And there was some discussion happening today that for the last 12 months now, S&P 500 is up somewhere near 25-26%, and Sensex or Nifty is up like 2%, and this is in US dollar terms. So, it is natural that no new money is coming to this market because you need growing markets to attract capital. A market where the last 1 year, especially from a foreigner's perspective, which has given nothing in terms of returns, is not so attractive right now. I mean, we may have another year in dollar terms which has no returns, and and the narrative is already said that we are going to 90-95 rupees on the dollar. So, I mean, at 86, why would they want to bring their money in? Those are the kind of issues that will plague a lot of fund managers. And at the end of the day, fund managers are as uh, you know human as individual investors are. So they will take as many wrong decisions as we do, and it's only some specific information that they have more than us in terms of research, etc., which stands them a bit apart. But really, in terms of making mistakes, they make the same kind of mistakes as we do all the time. Advances were rare to find in the market, 77 advances to 420 declines. So it was a seller's day. Everything is red. Reliance 2.5%, ICICI Bank 3%, State Bank 2.6%, HDFC Bank lost less. Kotak Bank 1.4, Bajaj Twins also down, Maruti, Mahindra, Titan, Tata Motors, NTPC, Trent, all these were smashed down in a big way. Nifty Next 50 also completely red. Zomato down almost 11%. DLF, Lodha down in real estate. Capital goods down 3.5%. It was like a complete uh, push down to Indian markets that we need to go find a new level of stability. We're fortunate to close at 23,000, but I'm not very sure if we will hold 23,000. Everything red in the sectoral data. Real estate smashed down 4%. So real estate in 1 month has now lost 14.5%, by far the biggest loser in the last 1 month. And energy, public sector enterprise stocks, PSU banks, consumption, infra, autos, everything was up more than down more than 1.5%. Only FMCG has managed a near 0% move today, a near 0% move on week, and a near 0% move on the month. So FMCG stocks probably are nearing some sort of a bottom, or some sort of a stabilization point where further selling in the market is not pushing them down further. Uh, Besides that, in the last 1 month, only autos are minus 1.2%, and maybe infra is 1.7%. So some of these sectors have not dropped in the last 1 month materially. But of course, real estate, bank nifty, consumption stocks, IT stocks, these metals, these have dropped more than that. Energy, by the way, has become the first sector, along with FMCG, to the second sector, I suppose, to go into red, and private banking is almost there. So a significant shift is happening where the last 12-month data, which was looking very pretty so far, is going to get, is not going to look so pretty. So new investors coming into the market, new SIPs coming into the market will see what is the last 12-month performance and then decide whether they want to come in the market or not. So this enthusiasm of, putting more money to the market may start to get a bit wary, and that is the biggest risk for the market right now. Real estate is breaking down some important supports. As on the chart, it does seem like that the last 7 8 months has been very distributive in nature, and these supports having broken can potentially lead the markets much further down. Overall reality 7.5% despite decent results. Phoenix Mills, Prestige Estate, Macro Developers, DLF all down 3% to 7% on the day. So the big fall in the markets, we can attribute this to Trump. We can also attribute this to the death cross on the Nifty that we were talking about yesterday, 23,050, which was the previous low right here, has also been broken. So there is no sort of support as of now in the immediate vicinity. We are, however, reasonably oversold. So if today's last move, which broke the supports, maybe was a liquidation event that happens sometimes when the market is very volatile during the day, and at different levels buyers get stuck, and they basically will try to just sell off their positions by the end of the day. So that potentially can also be happening today. Tomorrow we will know whether this sustains or not. So tariff hikes that we've been talking about all this time, is again, no executive order has been passed, so there is nothing which is official. But when talking to different media people, Donald Trump said that 100% tariff on BRICS nation will happen. He also said Spain is a BRICS nation, which is a funny statement actually. So this, I think, is causing a lot of nervousness in the markets. Uh, of course, Donald Trump's targets, at least in the narrative, has been that he wants manufacturing jobs to come back in automotive, technology, and pharmaceutical industry, and domestic production has to be improved. This ideally should have impacted only China from that perspective, because we hardly have any manufacturing jobs that we have taken from the US. Most of those jobs have gone to the Chinese manufacturing units. If we see the last Trump's presidency, IT actually did the best during his past tenure. So 25% CAGR was achieved in IT during January 2017 to January 2021. Financial services did well at that time. Real estate services all did, and overall the broader market index also achieved 15%. Only in that period you had some PSU banks, public sector enterprises, and that probably has nothing to do with Trump's presidency, which did not do well. So looking ahead, I mean, rupee is something that is also a dark horse, in the sense, dark horse, or you can say a joker in the pack, where until we reach some point of stability, new money probably will not come into India, and that is the problem. That 86.5, nobody wants to bring money to India because everybody is expecting 90. So that is a big issue right now. That is there. The US dollar itself either needs to come off from 108, 109 levels that we have, because strong dollar can continue to lead to capital outflow. If somebody is getting 5% on risk free in the US, and there is a chance of a 5% depreciation in India, why will they anyway keep any money in India? I mean, it's common sense, normal to think that way. This is the US dollar index. You can see that it was range bound, but then it broke out towards the Trump win that happened. Although the move started as soon as Elon Musk and Trump started to talk about efficiency, and started to talk about how they're going to change the American outlook, and that really has not stopped. It has dropped a bit. There was a sell on news on the dollar index last night, but really, I mean, it has not yet come off in any big way. Whereas uh, since September, uh, you can see that the rupee has taken off from 83 to almost 86 and a half, and it doesn't seem like stopping there at all. Crude oil is another sort of joker in the pack, where while there is significant amount of uh, US push towards more production of oil. uh, so if that happens, then oil may not go up to that extent that may be there. But in case Trump is not able to push for higher drilling, or getting peace to Middle East, then crude oil trends continue to seem to be going higher, and that probably is going to hurt us again as we go forward. You can see that crude oil is at that breakout level, if we do go there in above $80 on the Brent oil. So sectors that are in focus right now. Uh, so the U.S. healthcare budget, which is ballooning, uh, may get cut, and there may be some tariff on exports in pharma. So that is one area which is likely to get hurt. Then there is fear about info IT stocks. Again, U.S. corporate spending. Uh, uh, if they increase, but stricter offshore outsourcing policies may come, where they may say that if you want to do work, you do it onshore and you can't do it offshore, and you bring more jobs to America. So this is more of local hiring than doing it in India, and that is the whole model of Indian IT really. Then there is the metals space, where anti-China stance could create opportunities for Indian metal producers. But right now, there is hardly any movement on metals in Indian market because of this potential. So, because the dumping, I mean, if China cannot send goods to the US in this space, then they will start dumping rest of the world, and that will soften the metals prices. And on energy front, anti-ESG stance has been taken up uh, by uh, by Trump, and he has again, gotten out of the Paris Accord. So renewable energy initiatives may impact Indian energy companies exporting solar modules, etc., to the US, and could be more protectionist policies that could challenge Indian companies. So there is a all around fear that, and probably within the next few weeks, this should be clear that immediately what is going to happen, and maybe there won't be as much happening as market is expecting. So we have to continue with our path, of you know following trends. I mean, if in case we are not having trends, we have to sit in cash in some strategies, or rotate into the least hit sectors or least hit stocks, and wait it out. Sometimes you have to just wait it out for these troubled times to get over. Getting out of the market fully, waiting for the markets to start trending, establishment of that trend, once that is confirmed, it is usually too late. So you don't want to be out of the market, yet you want to protect yourself as much as possible. So, with the 3 4 year horizon, if we look in the past, we are still, looking quite good. So from that perspective, we are not yet in any territory which is not normal. So, this, what we are seeing right now is reasonably normal, given the fact that in the last 4 5 years we have, accumulated some gains on that front. And, you know one needs to be, either if you are a discretionary investor or trader, then you need to continuously assess why you are invested in certain pockets or stocks, in case you are having that discretion, or in case you are into non-discretionary strategies like like momentum strategies we are running. Then you just have to be following the strategies and not try to do anything, which is, I'll try to beat the market by cutting my investment here and bringing it later. Once or twice you may succeed in all those maneuvers, but over a longer period of time, that is something that, at least I would advise you to do. uh, uh, Prediction is something else that will ruin a lot of portfolios, because when you see a particular sector falling and you want to predict, this will keep falling or something else will rising, it is almost as good as flipping a coin, because nobody really is able to predict the markets, and you're much better off following trends. So automatically rotating into those sectors which have strength, or rotating into those sectors which are least hit, probably is the way to go forward. uh, there is a sense of, when you see on a short term basis, there is pain, no doubt about it. I mean, everybody's portfolio is bleeding, but then you also have to see that, what was the horizon with which we started this journey. And it's like we are on a 500-kilometer journey, and the first 200 kilometers was great, and the next 50 kilometers you hit a rough patch of road. I mean, you continue the journey, right? I mean, you basically are not happy during that phase, but you continue that journey. You don't abandon the journey. So this is where, your behavior and your psychology towards the market, your knowledge about the past, how markets have seen much more difficult times and have recovered. All think all that will help you. Uh, Try to not, you know, get into echo chambers where everybody is around you is saying, you're doing a mistake by investing. If you get into those kind of groups where, people are mostly short term oriented, who are doing intraday or things like that, as a longer term investor, you are a misfit there. And with that noise around you, it may prompt you to, leave your path. So you should not be doing that. Find like-minded people who are on the long-term path and discuss with them if you have to. And especially with those who've had experiences of many ups and downs, and they will tell you that there is really no point in trying to, be extra smart and trying to time the market. So that's where I'll end this video. Let me know your thoughts on this. Thank you so much for watching. Do like and share these videos. Please do subscribe to this channel, and also watch the other channel if you prefer Hindi. And I'll be looking forward to your comments. Thanks. Bye.